Speaking of, shares of NVIDIA are jumping this morning. This after its CEO Jensen Huang spoke in Riyadh at the Saudi Investment Forum. He gave some possible clues about a change in export restriction policy. That's a key for NVIDIA. And Christina Partsinevelos is here to give us some details. Christina.
Thank you, David. Well, in a surprising shift, also, Jensen Huang ditched his iconic leather jacket for a suit also in Riyadh today as he unveiled NVIDIA's partnership, like you mentioned, with Saudi Arabia, specifically to build a massive 500 megawatt data center with Humane, which is the kingdom's new AI venture. The real showstopper, though, from NVIDIA's CEO was that he was directly referring to Blackwell chips on stage. Listen in.
But this is two Blackwells, and it's 2,500 watts, 2,500 out of the 500 gigawatts of computing infrastructure that's going to be built.
To see those chips on stage because those are NVIDIA's most advanced chips. Saudi Arabia can now secure access to technology which was previously restricted in the region, and also really marks a significant policy change from Washington. So until now, companies like NVIDIA, AMD needed special U.S. licenses to export advanced semiconductors as well as semiconductor equipment to many countries in the Middle East, including Saudi Arabia, the United Arab Emirates. And that was largely due to concerns over the Middle East's close ties with Beijing. Saudi Arabia, keep in mind, largest trading partner is China. But as Saudi Arabia pushes towards its Vision 2030, what it calls, which has a goal of having AI contribute 12% to its GDP just in the next several years, this partnership with NVIDIA could be transformative. Why? Because NVIDIA will be able to access new markets across the Middle East, signaling a new chapter in both U.S. export policy as well as the global AI infrastructure race. And a press release was just put out now from NVIDIA, and they say that they're going to be deploying hundreds of thousands of GPUs in Saudi Arabia, especially over the next 5 years, about 18,000 specifically of the Blackwell GB300 in the next 5 years, guys.
So, Christina, this is enlarging the pool of buyers, of approved buyers for NVIDIA for the highest capability processors, I guess. Are we no longer at a point where everyone's being rationed and there's kind of supply issues here? In other words, NVIDIA can sort of service this open-ended demand?
I think this would fall in line with President Trump's original task of making a country-by-country negotiation. Remember, this week was supposed to be the AI diffusion rules on May 15th, which would have put all of these countries in tiers, and they would have been restricted on the number of chips they could receive from, let's say, the likes of NVIDIA. Now, having this announcement, it shows that President Trump is moving ahead with his individual country-by-country deals. So going forward, we'll probably hear an announcement with the UAE being the next one. The New York Times put out a report yesterday about the certain AI company in the Emirates that did receive some NVIDIA chips. So we'll see how this progresses going forward with individual countries as opposed to just a blanket rule from the U.S. government.
And Christina, in terms of the de-escalation in the trade war with China, but still it was the ban on the H-20s, the $5.5 billion write-down NVIDIA took as a result. Do we have any expectation of what they're going to be able to sell into that market?
The expectation is that there will be another chip. It's not necessarily a workaround. It's just every time NVIDIA has to come out with a new chip that falls under the threshold. They've done so over the last several years, and they will continue to do so going forward. So the assumption is maybe it'll be the H-20 that'll be just revamped a little bit so it falls underneath the threshold. There are two camps of people that are there, argue that this is NVIDIA going underneath the threshold each time, really seeking out profits and still maintaining that relationship with China. Or there's the other flip side where people are saying, here, NVIDIA's caught in the middle, a negotiation tactic or chip, I should say, between President Trump and all of these countries when really they just want to put forth their product. And Jensen Huang has said previously that China is not far behind at all. So really, is it helping by blocking complete ties with the country when they are already making advancements on their own soil?
Yeah, he obviously has been vocal on that point. Christina, thank you.
Thank you.
Even after a string of impressive earnings reports over the last 2 weeks, many well-known companies have struggled as President Donald Trump's tariffs have sparked retaliation from trade partners, creating high economic uncertainty. This has likely put investors on edge, as experts have floated terms like recession and bear market. However, today's news has caused a shift in momentum, pushing many leading tech stocks up, ranging from consumer tech producers to their peers in the artificial intelligence (AI) space, including market leader NVIDIA, which has been rising since markets opened. For many industries, but particularly for technology, this week is off to a fantastic start. The US and Chinese governments said in a joint statement this morning that they will halt their tariffs on one another for 90 days as they continue their conversations. This is a really good thing for investors and consumers alike. With the US reducing its tariff against China from 145% to 30%, and China lowering its retaliatory tariffs from 125% to 10%, it means that both countries will drastically cut the tariffs they have placed on one another, greatly reducing the costs incurred by numerous businesses. Compared to their contemporaries in the consumer tech sector, like Apple and Samsung, companies like NVIDIA will not be as affected by this news. NVIDIA's biggest problem is that this tariff halt does not remove restrictions on the nations and organizations to which American companies may sell AI processors. NVIDIA's stock, on the other hand, has responded favorably to the news, rising in value. Investors Business Daily reported that NVIDIA's shares increased 4.3% in morning trading. The behemoth of artificial intelligence's stock has risen sharply above its 50-day line in recent trading sessions and is now getting close to its 200-day line, which is an important location to keep an eye on. Shares have continued to rise since then, and they are now up over 5%. The tariff suspension doesn't immediately benefit NVIDIA, but the news may turn out to be a positive sign. But today's gains are probably due to the market's favorable momentum. What this event might mean for NVIDIA is the key lesson for investors. After months of high tensions and increased uncertainty, which have hurt share prices, it appears that hostilities between the United States and China are now reducing. Furthermore, this is a great moment for NVIDIA. On May 15th, the Trump administration is scheduled to announce its modifications to the AI diffusion rule, which are anticipated to benefit tech firms which desire the removal of the existing trade limitations. When President Joe Biden issued the current AI dissemination rule in December 2024, NVIDIA's leadership argued against it. Jensen Huang, the CEO, has since assumed the role. In order to stay ahead of China, he recently advised a gathering of officials that the United States must accelerate the diffusion of American AI technology. Future policy adjustments may include less limitations on exporting AI chips to specific nations if trade ties between the United States and China are strengthening as they seem to be. So, what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Look, we've just come off discussing how maybe the equation of what is profitable in AI infrastructure here in the US is changing. How much does the abandonment of AI diffusion rule help or hinder those sorts of maths?
Well, the diffusion rules being mitigated by the Trump administration was an important step forward because, quite honestly, they didn't make any sense to limit the technology to go to a wide swath of countries that really, in many cases, were our friends, not foe. And so the question is, what comes next?
Yeah.
And what are the rules that they will put in place to hold the strategic kind of lead that they perceive?
What's interesting is, as you say, countries that were deemed allies, Israel, India, suddenly on a tier 2 level, not as able to access as many sophisticated chips as they'd wanted to. That was the proposed AI diffusion rule. But now we come to this awkwardness where it's going to be sort of a case-by-case basis, country-by-country basis. Malaysia, where Oracle wants to be putting a huge data center, for example. When do we get any clarity on that? And how do you start to see companies and countries navigate it?
Yeah, I think it's going to be, they're going to use it almost as a bartering tool in these trade negotiations, and it is a strong bartering tool. I think, however, the administration has to be very careful that we have to look after our own strategic initiatives and own strategy for national security, but we cannot overreach. And in part because there is a very viable competitor with Huawei. We want to pretend that NVIDIA is a monopoly. It is not. Huawei has shown an incredible prowess over the last 2 months even. They've introduced these fantastic chips and fantastic racks that, in fact, do compete with NVIDIA. So if we push too far on this, there is an alternative for the Malaysias to move to a different vendor.
So when that argument comes from Jensen Huang that I actually want to not only access Malaysia and Indonesia and, well, most of Southeast Asia, but I also want to sell into China still. Should he be able to?
I do think that we're looking at this in the wrong way, to be completely frank. Let's think about DeepSeek. DeepSeek's innovation actually is helping our models. And Facebook is adopting some of the innovation that came out of DeepSeek. So one thing we can't forget is that innovation begets innovation. And you cannot stop that kind of life cycle of innovation. And if we slow innovation in China, we're slowing innovation here as well. So, what I think this should focus on is, in fact, IP theft. So focus on making sure that our IP across the board, not only for GPUs, but any kind of equipment, whether it's robotics or medical equipment, that's not being stolen by the Chinese, right? Instead of kind of fighting over the widgets. So I think we like to think of this as, are you friend or foe, or are you? And perhaps there's some place in the middle where we can't treat China as this enemy of the people when they're really not. They too are innovating at a pace that is probably faster than we are.
Given that Chinese competitors like Huawei are vying for NVIDIA's piece of China's rapidly expanding AI industry, this is vital for the company. To counteract the extra tokens, words, punctuation, and symbols they employ, and to speed up thought processes, reasoning models require 100 times more processing power, according to NVIDIA CEO Jensen Huang. If they don't, consumers may stop using them because they are too slow to provide answers. For years to come, NVIDIA's sales will be supported by this increasing demand for more processing power, and trade disputes are not likely to get in the way. NVIDIA's biggest clients include Microsoft, Amazon, Alphabet, and Meta platforms. In 2025, they anticipated spending around $320 billion on semiconductors and AI data center infrastructure. However, Wall Street recently expressed fear that tariffs would affect their core businesses, which prompted them to reduce their projected capital expenditures. But none of those four businesses cut their capital expenditure projections when they just released their most recent quarterly financial results. In actuality, Meta Platforms increased the range of its projected capital expenditures from $60 billion to $65 billion to between $64 billion and $72 billion. According to NVIDIA's forecast, the company's first quarter sales for fiscal 2026 will be over $43 billion, a 65% increase over the same period last year. Based on past quarters, the data center segment is expected to account for approximately 90% of the company's overall revenue. Sales of AI GPUs and related parts are recorded here. Investors are concerned that tariffs and tensions in international trade may hurt NVIDIA's sales of data center chips, which is why the company's stock is down 22% from its peak. On May 28th, NVIDIA will release its most recent quarterly financial data, which should allay market fears. If the May 28th report is favorable, the current inexpensive valuation of NVIDIA's stock might lead to substantial upside. Thanks to booming sales of its data center chips, which are the best in the world for processing artificial intelligence, AI workloads, NVIDIA's market valuation has increased by an astounding $2.5 trillion since the beginning of 2023. However, as investors attempt to manage the escalating tensions between the United States and its trading partners, NVIDIA's stock is down 22% from its peak. Despite the fact that President Donald Trump's tariffs do not apply to semiconductors, investors are concerned that trade tensions may lead to a downturn in the economy, which would make NVIDIA's customers spend less on chips and components. There is currently no indication that expenditure will slow down, according to recent advice given to investors by some of the most influential AI businesses. However, when NVIDIA reports its financial results for the first quarter of fiscal 2026 that concluded on April 27th, investors will get a significant update on May 28th. Here's why I believe the news will cause its stock to rise. With an astounding 98% market share in 2023, NVIDIA's H100 graphics processing unit, GPU, was the most popular data center semiconductor available for AI developers. Developers are now lining up for NVIDIA's newest chips, which are based on its Blackwell and Blackwell Ultra designs, even if it still dominated sales in 2024. Next-generation reasoning AI models will benefit greatly from the new Blackwell Ultra GB300, which will begin selling in the second half of this year and can provide up to 50 times more performance than the H100 in some configurations. Compared to conventional large language models, LLMs, these new models spend more time thinking in the background, correcting possible mistakes to provide the user with the most accurate results. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now let's dive into today's video.
A CATL is looking to list in Hong Kong, and US residing investors aren't able to access that. How does that make you feel as a portfolio manager who wants to be able to thrive in innovation worldwide?
Yeah, frustrating. But you know what is also frustrating? A CATL wanted to build a factory here, a few years ago and was stopped by the Biden administration. They actually wanted to move manufacturing back to the US and weren't able to. So that too is frustrating as an American, to have that the initiatives of bringing manufacturing back of these technologies to the U.S. is being hindered, which hopefully will stop with this administration. I think CATL, us not being able to access it, this too will be overcome, and I think these are hurdles along the way that we'll have to work through with the Chinese and the Trump administration.
Uncle, you were very clear that you did not want the AI diffusion rule and you felt that it was just harming most people in this environment. What then, as a portfolio manager, do you do in this current lack of clarity, the fact that it's going to be a case by case? Do you still think NVIDIA will be able to compete well, will be able to access markets? And you go from the optimistic side of things, do you start to add on in this point?
I think it only makes sense to allow for our technology giant, NVIDIA, who, quite honestly, is the pride of our nation at this point, right? They are driving forward the AI revolution. And so I do think that over time, I think by September, we'll have very clear boundary conditions around where we can and what we can or cannot ship.
And IP will be protected, do you think?
And I hope IP will be protected. And I think that's the most important thing here. IP should be protected on a go-forward basis across all industries, with a commitment from the Chinese government to make sure that that is in fact the case. Because we can't have this industrial espionage occurring all over throughout many industries. So I feel very optimistic for the rest of the world and for China that we will sort through this, because, we are a globalized world. And we can't pull back from that. We can bring manufacturing back here, which I wholeheartedly believe in, but in a controlled way.
Wall Street's consensus forecast states that NVIDIA might also report first quarter earnings per share, EPS, of $0.89, a 46% increase over the same period last year. Investors should keep an eye on this figure since it affects the stock price and valuation of the company. NVIDIA's guidance for the current fiscal 2026 second quarter will also be closely watched by Wall Street analysts, as it will reveal whether the company anticipates that at least some of its customers will begin to reduce their AI spending as a result of the economic uncertainty brought on by the trade tensions around the world. According to the consensus, analysts will be expecting overall revenue forecast of about $46.4 billion. The stock of NVIDIA may be sold off if the forecast falls below that amount. I believe that NVIDIA's Q1 financial report on May 28th might pave the way for a persistent upward surge, especially if Huang formally allays investor anxieties about economic headwinds, which caused the stock to drop 22% from its all-time high. One of the main causes is valuation. As of this writing, the company's stock is trading at a price-to-earnings (PE) ratio of about 40, which is a significant discount to its 10-year average of 59.7, based on its fiscal 2025 EPS of $2.99. Additionally, Wall Street projects that NVIDIA will generate $4.41 in earnings per share in fiscal 2026, which would put the company at a forward PE ratio of 26.4. To put it another way, the stock would need to rise 126% during the course of the following year in order to trade at a PE ratio of 59.7, which is its 10-year average. However, the long-term outlook appears much more promising. Huang told the audience at NVIDIA's GTC conference in March that he anticipates $1 trillion in data center spending annually by 2028, mostly due to the processing power needed for reasoning models. Accordingly, on May 28th, NVIDIA may even reveal an update on their next Rubin GPU architecture, which might offer a further 3.3-fold boost in performance over Blackwell Ultra. It will open the door for developers to produce even more sophisticated reasoning models when it formally launches sometime next year. The May 28th release, in my opinion, will not only allay immediate sales worries, but also serve as a reminder to investors that NVIDIA intends to dominate the AI market for many years to come. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Kevin Green is with us, and we always take a look at the levels after yesterday's rally, which was super exciting for folks, and Goldman Sachs raising the price target for the year end to the S&P to 6,500. Some of your thoughts about the current action we're seeing?
Yeah, Nicole, we continue to see positive price action happening in the S&P 500 as well as the NASDAQ 100, and we continue to see a broadening out of this market. It's not only just concentrated in mega cap tech stocks or communication services. You're actually seeing some relative outperformance when it comes to industrials, even materials catching a little bit of a bid over the last couple of trading sessions here. And in fact, industrials are actually the number one sector on the year if you're looking at the S&P 500 sector breakdown. It's up around 6.8% or so. But going into today's session, obviously you want to continue to see a more of a continuation of the upside here. Looking at the 5,900 level for the S&P 500, if we're looking at the daily chart here, at 59.05, they have this JP Morgan hedged equity collar position, and the short call for that collar position sits at 59.05. There's a short call position there, Nicole. So that actually is going to be an area that a lot of the individuals that actually watch flows are going to be keeping an eye on there, and that could be an area of resistance. Still want to hold this upper channel line as well. We have seen a technical breakout for the S&P 500 yesterday, broke above that 200-day moving average, and any type of further breakdown, you probably would look at the 5,700 level to be your first area of support in this market, getting back potentially within that range of 5,580 to 5,700. On an intraday basis, once again, 5,900 to the upside, something to be mindful of. Do we see a breakout above that? That would be actually fairly aggressive. You would start seeing maybe valuations getting really, really stretched here. But if we do see that, once again, 59.05 level could be an area of resistance. 58.30 is an area of support. You want to see some buyers actually stepping in. If we have a breakdown below these levels here, then 5800 is going to be our negative gamma area. Overall, it still looks very bullish. Market is positioned bullishly when you're looking at the options flows for the most part, seeing a lot of premium sellers for downside puts. They're selling premium, they're buying upside calls, these risk reversal type of strategies taking place. You're still seeing rolling up of call strategies for those that are hedging portfolios. This is the environment in the mix that you'd like to see trying to get back to new all-time highs here. We do have some gaps below on the S&P 500, though, we have to be mindful of that could be tested here. So for overall, we're doing pretty well. Economic data looks good, and we'll continue to try to bring this trend to fruition, trying to get us back to all-time highs here.
All right, so watching 5,900, the 6,500 target for Goldman Sachs. So thank you for those key levels, and also what you said about JP Morgan this morning. So we'll watch for all of those levels. In the meantime, industrials, we're looking at UNP.
Yeah, I want to kind of piggyback off of what Jeffrey Kleintop was talking about earlier here. You're actually seeing some really interesting developments happening and taking place. UNP, and if you're looking at the industrial sector as a whole, actually had a technical breakout yesterday. And if you have the weekly chart, you can see that flag pattern and that breakout even higher here. That MACD is in a bullish formation with that 12 EMA above the 26 EMA. This is a weekly chart, and you do see that 12 EMA above that zero line for the MACD. That is bullish. We do have the RSI, or the CCI, my apologies, in that overbought territory as well. This is actually a very healthy chart. And